Happy Friday, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern. Thanks for joining me. It's Friday, the 27th of January, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The key overnight news, a couple items. GDP just came in, annualized Q4 advanced GDP. Q on Q came in at 1.9 versus 2.2, a big miss there. Personal consumption 2.5 in line. Durable goods also had a big miss, negative 0.4 versus plus 2.5 expected. Durable goods ex transports 0.5 in line. And also the advanced GDP price index for Q4 came in at 2.1 in line, as well as the core PCE came in line as well. And then, of course, I'm sure you heard about the Google release. Google missed in its release yesterday. After the market, it came in at $9.36 versus $9.63 expected. $26 billion in revenue versus 25.2 billion expected. So it beat on the revenue side, but not earnings. Also, Intel came in at 79 cents versus 76, 16.4 billion versus 15.8. There's also talk in DC that the Dodd-Frank law is at the top, as a top GOP target. Could consider action on Dodd-Frank as early as late spring. The commitment was also made by President Trump to get rid of huge parts of this law that was put in place as a protection, as an attempt to protect the financial sector by requiring there are many things in it, but parts of it require more collateral for banks and things like that. Okay. There's this, of course, there's this fight going on between Trump and Mexico with the implementation of a potential border tax of 20%. And also, there's discussion yesterday of this wall that's being built on the southern border of the U.S. These are all things that are likely or potentially destabilizing to the market because they're interfering with trade. So that's likely to translate into potential volatility. We know the Mexican peso has been moving around a fair amount recently. Other news, um, not too much. Just know that the markets in China and across parts of Asia are going to be closed for the next week in celebration of Lunar New Year. Um, and also Microsoft Beat. So that's pretty much it. All the rest you can look up yourself. As far as what we're expecting today on releases, having finished the 8:30 figures, at 10 o'clock we get University of Michigan confidence final for January. The consensus is 98.1 Michigan, University of Michigan final. And then we get the Baker Hughes rig count at 1 o'clock Eastern. As far as speakers, 9:30 this morning, we got ECB Speaker Costa at a conference, and then the calendar is pretty much empty for the rest of the day. My expectation for today is that we're likely to see a little flash in the pan on the open, and then it's likely to be a fairly sluggish day. We're still up against all-time highs in the S&P 500 and the Dow. We're seeing crude oil dropping strong right now. Crude oil looks to have dropped about 50 cents since it opened, since the pit opened 5 minutes ago, and continuing to drop. The overall position of the market is is risk averse. This morning, the strongest future I'm monitoring is the Bund, up 27 basis points on price, and then followed by the Treasury bond, and then and then the U.S. Treasury note. The worst performer this morning is crude oil, followed by the Japanese yen, then gold, then euro stocks, and so on. It's actually a mixed bag with a little more, seems leaning to the sell side. Here's what crude looked like just now on the pit open. Look at that bar. That's a 62 cent move there right off the open. This looks like news. Let's have a look at what we expected yesterday. Yesterday's primary hypothesis was for the market to open quiet, push up out of the prior day's range. Oops. Push up out of the prior day's range right there. And then the expectation is it would roll over and just go sideways and finish sideways on the day. The secondary hypothesis is that the market is likely not to push higher early, but instead it's likely to push down off the open. In that case, we would be stalking long. We would be looking for longs in the S&P futures, and the aim is to shoot for the overnight high, or 2300 is the key target above. This did not work yesterday. So nothing happened with that hypothesis. This hypothesis, however, was right on. I'll show you how that is. Remember, it's a push outside of the prior day's range, fail, fall back in, and go sideways. Here's what actually happened. Again, it's really important when listening to someone to see what the logic is, and not only to move on, but to see why it worked or didn't work. Here's the push out of the prior day's range. This is the prior day's high right there at 22.95 and a quarter. And then we rotated back in, attempted another push out of the range, back in, out of the range, and then ultimately it pushed lower, and then it ended up going sideways as expected. So yesterday's Hypo 1 was on the dot. Tough trade if you're looking for direction. Not so bad if you're looking to scalp edges, the edge of balance and so on. The market tended to rotate pretty cleanly. There are a few good rotations in there. Lots of 3 to 3.5 point pushes back and forth in the S&P. Again, yesterday, if you listen to the Trader Bite, I talked about the fact that we have pushed all-time highs. We do expect a higher high, but we're expecting some sort of exhaustion here in the short term. In order to get past the exhaustion, the market is likely to slow down, go sideways, pull back. And the reason the market pulls back or goes lower, seeks lower prices, is what? It is to advertise lower prices to entice buyers to step back in. The market is moving up to find sellers, and it'll continue to move up until it finds those sellers, and the market moves down to find buyers, and will continue to move down until it finds buyers. It's really important, in my opinion, for you to understand that, to know that this is the purpose of the market. The market is just an auction, and all we're doing is exploiting the behavior or the nature of the auction as traders. Here's the overnight session. So the overnight session dropped right off the open on Google, went sideways, sat in the middle, tested higher, tested up to 96.75, pushed all the way to the other side of the range, and has gone to the middle. There is really not much volume here. 106,000 contracts, and the market is completely balanced with a high kurtosis. The profile is balanced right in the middle, and so there's not much there. The overnight session is basically saying there's not much there to deal with. We have our point of control, which is that pink line, right in the middle. We have the mid right in the middle. We have VWAP of the session right in the middle. We have the the opening price right above us. We're in the middle of the range. We broke the initial balance both on the high side and the low side. What is this tell us, put together? How does this come together, and what does it tell us? It tells us that the market has absolutely no direction. The market has nothing to price in at the moment, and so it's short-term traders in control. There's no direction by any large participants at the moment. Okay, so that's how things are shaping up. As far as what's expected this morning, it's a tough call this morning. Again, we're pretty compressed. We haven't gone anywhere. We're opening inside of value. Value is the gray portion of the box here. We're opening inside of value, right up against yesterday's close. So the S&P is down by a tick, flat, up by a tick, flat, and so on. So there's likely to be not much movement on the open, expecting an open auction in the range. And then I'm looking for it to test down initially, down to the point of control, and then stabilize, and then attempt to push high, and then come back in. Not expecting it to go anywhere. Yesterday's profile is completely balanced. Again, yesterday's profile was balanced. The overnight profile is balanced. So there's consolidation, compression going on at the moment. And so it's likely to just do that for another day, and it's likely to continue to break higher. Why am I assuming it's going to break higher? The overall stance is the same. We're still in an uptrend. The gap zone below us is still open. You can see that gap zone right there in gray. And the market has not attempted to move down. The move down is likely to be quick, and the target downwards is 2277 and a quarter. But I do not expect it today. I expect today to be quiet going into the weekend. Okay, that's the primary hypothesis right there. The secondary hypothesis is it opens open auction, pushes up, attempts to push higher, and then it falls back in and it starts to drift lower into the afternoon as the market balances out their positions. Participants balance out their positions into the weekend after a big all-time high week. We may see some reversal into the weekend, into the close today. The close is not one that you'll want to fade. In other words, you do not want to trade against whatever the direction is in the last half hour or so. It's likely to be continuous as again, people balance their positions out. Okay, it's Friday. It's like Friday. Please hit the like button on your way out if you like what you're hearing. I'd appreciate that, and also make sure that you've had a chance. Hopefully, you've had a chance to look at the video about order flow analysis and execution after the plan has been formulated, which follows on this trader bite and is the process that I follow every day as a professional trader. Good luck into the weekend. Keep it tight, and I'll catch you Monday. Take care.